We are recording. Voila. Okay. So let me see myself. Okay, can you hear me, Haga?
Yes, we can hear you.
Okay, great. So good afternoon, everyone, and welcome to our 6th event of the so-called Impact Investor Circle series, which we actually launched in November last year under the theme Improving Access to Capital for SMEs in Africa in general, with a specific focus on Zambia. Zambia is aspiring to become a regional impact investing hub through the work that the National Advisory Board for Zambia, with the financial support of Prospero Zambia and technical advisory services from the Global Steering Group for Impact Investing. As usual, we have a lot of ground to cover today, so let me start by thanking all of you who have tuned in today. For those of you who are unable to join the live session, you'll be able to watch the recording once it has been uploaded on the 4IP Group YouTube channel before the end of the week. Let me quickly present the house rules. Please turn off your microphone whenever you are not speaking throughout the event in order not to disturb the speakers and the listeners. And please do feel free to use the chat box to raise questions so that those questions we can't answer due to time constraint can be addressed after the event, either by email. And we're also happy to set up bilateral calls depending on the nature of the comments or questions received. And last but not least, kindly remember to identify yourself and your organization whenever you're asking a question. Go to the next slide. So, the agenda today. So as you can see, we have 1 hour together, and they give me the distinct pleasure that the opening of this event will be carried out by Mr. Andrew Kasilimani. Andrew Kasilimani is newly appointed CEO of the Zambia National Advisory Board for Impact Investing. After that, I will do a short introduction to the study that we are carrying out on behalf of the National Advisory Board. And then the substantial part of today's event is 2 parts. So the first part is basically a conversation between a representative of 2 development finance institutions on the scaling of the impact investing market in Zambia, which I will also moderate. And the second part of the discussion will be looking at some of the key barriers and some of the key drivers that can help scale up the Zambian impact investing market. And at the end of the substantial part of the presentation, my colleague, Peter Chintu, he will make a few announcements regarding the survey that we are circulating among all of the international and domestic impact investors, the deadline, and the next roundtable or webinar that we're organizing on Thursday with non-DFIs. So, Hagai, I don't know if Mr. Kasilimani is with us now. Hagai?
Hi, Christian. Andrew is not yet in, but I'll do the presentation if I may.
Or if you like as well, Hagai, I can also do my introduction and then we can come back again and see if Andrew is there. What do you think?
Sure, because I'm just trying to get him on board. Yeah.
Okay, so let me continue while we wait for the CEO of the National Advisory Board to join us. So basically, we have just started a study. That's the Zambian Impact Investing Market Study. This study aims to estimate the overall size of the Zambian impact investing market, as well as the demand for impact investment in Zambia. More specifically, this study aims to do the following. We have to map impact investors, including which SDGs or SDGs they focus on, the investment product that they use. We're also looking at the market size, that is the total value of impact investing in Zambia. What are the methodology used by the impact investors and what are the assumptions made? Furthermore, we are looking to identify existing and potential trends in the impact investing market and show development. So that would be using the Kukula baseline study from 2019 as a baseline to see what has been the trend in the last couple of years within the Zambian impact investing market. And in addition to that, we are going to investigate the fund management landscape and investors using impact measurement and management tools. We are also going to identify asset under management by sector, by instrument, by organization, including DFIs, as well as non-DFI investors. And we are going to investigate investment performance and risk of various instruments used by the impact investors. And then we are going to map the so-called enterprises who receive the impact capital and the number of transactions. And finally, last but not least, which we'll be addressing through today's roundtable, we're going to look at some of the key challenges and opportunities to grow the impact investing market in Zambia. Okay. So before we start, what is a development finance institution? So the definition of a development finance institution is a national and international development finance institutions are specialized development banks or subsidiaries set up to support private sector development in developing countries. They are usually majority owned by national government, and they source their capital from national or international development funds or benefit from government guarantees. This ensures that their creditworthiness, which enable them to raise a large amount of money on internet capital markets and also provide financing on very competitive terms. So there's two types of development finance institutions. You have the bilateral development finance institutions, which are either independent institutions such as FMO from the Netherlands, or they can be part of a larger bilateral development bank, such as the German investment development company called DEG, which is part of the German development bank KfW. And then you have, and at the bilateral level, you can have European development finance institutions, or you can have the national ones in the developing countries, such as Development Bank Zambia that we have with us today. And then we also have multilateral development finance institutions, which are private sector arms of international financial institutions, such as the World Bank Group, that have been established by more than one country and hence are subject to international law. The shareholders are usually national governments, and these institutions finance projects in support of the private sector, mainly through equity investment, long-term loans and guarantee. And they usually have a greater financing capacity than the bilateral development finance institutions, and they act as a forum for close cooperation amongst government, according to the definition of the OECD. So why are development finance institutions for the Zambia's economic growth? Well, basically, countries are increasingly looking to their DFIs to help fund solutions that create jobs, economic opportunities, and address the issue of economic development. DFIs are often provide support to companies or funds in the form of loan, equity or investment, or loan guarantee to help reduce risk. There are now 17 international bilateral development finance institutions. There's also a growth in the amount of money that they are spending. For example, between 2012 and 2017, the amount of spending grew by more than 50%. However, there's a lot of diversity in how DFIs actually report on the investment they make, and some don't make data readily available or makes it very hard, let's say, for researchers or for the public to access that. One of the challenges is actually identifying what are the indirect effects of DFIs. That is something that I was working on in a previous part of my career when I was working at the Overseas Development Institute, where we're looking at these effects of DFIs. For example, what is the job displacement happening from a DFI investment, or what type of quality jobs are being created? Or more broadly, what are the broad impact on the economy beyond the direct effect that you see through the project level? So basically, the supply of impact capital in Zambia is growing and can complement public spending and official development assistance by utilizing private sector capital and skills to reduce the vulnerability of Zambia's economy to external shocks, as well as to addressing socioeconomic needs. Since 2015, suppliers of impact capital have committed almost $1 billion to Zambia. These suppliers are both private sectors and development finance institutions. According to the baseline study by Kukula, there was 185 investors, or in terms of organization, 35 development finance institutions and 150 impact investors shortlisted in the baseline study. Given that commercial banks' inability to support the impact sector, we have decided to take a closer look at the important role of DFIs they play in growing the impact investing market size in Zambia and in overcoming some of the challenges faced by Zambia's emerging impact entrepreneurial base. This will be done with a particular focus on two DFIs, a multilateral DFI, the International Finance Corporation from the World Bank Group, and one bilateral African-based DFI, the Development Bank of Zambia. So before we start the conversation, back to you, Hagai. Is Andrew with us?
Yes, it's managed.
Okay, fantastic. Okay, Andrew, please, over to you. And good to see you. Thank you.
Thanks, Christian, and thanks everyone. Apologies for I had a little issue trying to connect. But all the same, thanks so much for the opportunity to engage at this level. I think we're excited that everyone on the table is participating and having this engagement with us. And we are glad that Christian is facilitating this process. For us as the NABI, obviously we're doing some work in the Zambian ecosystem, and our role is basically to facilitate the market and see how we can get important data that's going to inform our decision and how we can interact with our partners in the ecosystem in Zambia. And so this exercise first becomes an important element in terms of finding out the actual market size in Zambia and see how that can inform how we move together as a NABI and the partners on the ecosystem. There are 4 areas that we usually focus on as a NABI. So there's market development, we've got communications awareness, and one element that this one falls under is the research and development. So it is a critical element of our work. And part of what we want to do is ensure that at least we get informed by this process. And as a result of that, we commissioned this study where the 4IP team is cooperating with us in delivering this study. And we're obviously cooperating with all of you that are on this table to try and see how we can work together in getting to deliver that objective. Essentially for us, we're just looking forward to a successful 3-4 weeks where we can get to size our market and see who's playing their part in the Zambian market. And we're looking forward to your support in terms of supporting 4IP and Christian in delivering this process. So I look forward to today. I look forward to the next 3-4 weeks of delivering this process. So thank you very much, Christian.
Thank you very much, Andrew, for this introduction and this welcome to all of the participants who are with us today. We had more than 70 people registered, so some of them will hopefully join us today. And as I said in the beginning, the event will be recorded, so everyone who's not able to join us, they can see the recording subsequently. So let me start with the first part. As I said, so basically just allow me to introduce very briefly. There is basically a need of cooperation between development finance institutions because more cooperation on these issues that Andrew has just raised could create more, for example, industry standardization. And if there's more standardization, there is a greater understanding of risk. And then DFIs might be willing to go into the challenging environments, such as in low-income countries. The DFIs are struggling with how to find the projects to invest in, how to effectively assess risk, and how to at the same time balance the need to continue to make profit. Despite the stated intention to invest more in low-income countries such as Zambia, an organization like DFIs has recently found that only 29 out of the 49 least developed countries has received financing from DFIs. As DFI profiles are rising and more money has been spent on DFI, they're also facing more scrutiny, which is leading to more of the conversations about measurement and transparency. As the role of DFIs rise and they play a bigger role in the development discourse, we would like to raise a number of more general questions on this basis today. For example, how are you measuring and providing more impact, or what are your role in least developed countries in general, or Zambia particularly, which is the subject of today's conversation, and how can you invest and create the right pipeline for investment? So since this event falls within the framework of a specific study, the size of the impact investing market in Zambia and the terms of reference that we have, we will restrict the conversation to a number of very specific questions in the first part of the event. So let me start by raising the first question. We have with us today, I will allow our speakers to introduce themselves rather than having an introduction by me. So before you answer the first question, if you could be so kind, just briefly to introduce yourself. So the first question that we are asking is, through which type of financial products is IFC of the World Bank Group or the Development Bank Zambia providing capital to target impact objectives. So perhaps we can start with Mrs. Madalo Minofo, who's the residential representative of the International Finance Corporation of the World Bank Group, representing IFC in both Malawi and Zambia. Over to you, Madam.
Hello, good evening, Christian, and good evening to the people that are on the call this evening. A pleasure for me to join the conversation today. And by way of introduction, I am the resident representative of IFC, the International Finance Corporation. And as Christian had mentioned in the introduction, our role as the private sector wing of the World Bank is to grow the private sector in the countries in which we operate. And this topic is a topic that is very dear to IFC, because as some of you may know, especially those people that have been in impact investing for a long while, you might know that IFC helped launch the operating principles for impact investment. So basically, as IFC, we have been involved in impact investing ever since our when IFC started, that is over 50 years ago. So for IFC, we look at impact investing from a number of angles. We think impact investing can play a major force in helping developing countries at this point, especially rebuild from the COVID-19 crisis, but also tackle climate change and achieve the sustainable development goals. And as I mentioned, by our very nature as IFC and as a development finance institution, all our investments are targeted investments that are meant to address some of the global, social, and environmental challenges, investments around climate change, and at this point with COVID, looking at investments that help with the interconnectedness of the world, and really making sure that we are in our role helping developing countries, which are the countries that we mainly operate in, meet some of the challenges that they are facing. And now turning to the specific point that Christian raised, I think as IFC, in most of the countries that we operate, and in Zambia in particular, we mainly use debt financing for our impact investing. And in this sense, what we normally do is we work with financial institutions as well as private sector operators to make sure that we are making available the capital that they need to establish businesses that will have an impact. And by so doing, what I also wanted to mention is, because one of the issues that we have also increasingly identified, which I think was raised by Christian, is that usually there are not sufficient promising investment opportunities to help address shortage of commercially viable projects with positive impact. And in this regard, as IFC, we are now also using what we call IFC 3.0, which is trying to create the markets ourselves. So in a sense, we are working upstream, making available project preparation funding so that we can also help in structuring projects that can be able to address some of the issues that have been raised. So I'll stop there for now. I know that this is a continuing conversation, and I'll be able to come in at a later stage. Thank you, Christian.
Thank you very much for the first remark, Mrs. Minofu. And we are very delighted also to have two representatives of the Development Bank of Zambia with us today, Mrs. Samantha Okapara and Mr. Calvin Chitangala. Again, if you both of you would be so kind to briefly introduce yourself and then address the same question. Let me just reiterate, through which type of financial products do Development Bank Zambia provide capital to target specific objectives? Over to you.
Thank you, Christian, and good day, everybody. I am Samantha Opara. I'm an investment officer and also a task team leader on environmental and social safeguards. Thank you.
And good afternoon, everyone. My name is Calvin Chitangala, and with Samantha, I'm also in the investments department at DBZ. Specifically, I am actively involved in issues around advisory and also impact investments, like the ones we're doing now. So I guess, Christian, to kick off on your question, you have mentioned with regards to the impact objectives, and as DBZ, we do understand impact objectives or impact themes to be categorized in, of course, you've got the green impact and the orange impact. Issues around green impact, you've got the water, sustainable forestry, sustainable agriculture, renewable energy, energy efficiency, green buildings. Orange impact, you've got issues around affordable housing, inclusive finance, and education and health. Now, your question says, how does a DFI like us provide capital with regards to these particular impact objectives? I think to highlight some of the other, of course, to highlight some of the key issues, you'll be talking about things like our lending operations in itself, because just like the IFC, we ourselves have a core mandate that is well aligned with impact investments. So you'll be talking about debt and equity finance and the like. I think I'll pass on to Samantha as well to highlight a few as well.
Okay, thank you, Calvin. So I would first start by actually enlightening everyone on the mandate of the bank. As Calvin has mentioned, our mandate is actually to make available the long, medium, and short-term debt and equity to both the private and public sectors, and also to support initiatives that contribute to the government's economic development agenda. So in that regard, and as Calvin has just mentioned, we look at the impact themes and also align them to the government's sectorial developmental agendas. So we ensure that what we are supporting with regards to that have an impact in the economy is aligned with the national development plans, and currently the 7th National Development Plan. Now, when we look at that, the current National Development Plan, we see that most of the sectors are actually aligned to the thematic areas that are actually supported in the Global Impact Investment Network themes. And that is where we actually base our objectives as we align our products. Now, with regards to the exact products that we're looking at, as mentioned, we do actually make our investments through direct lending and also indirect lending. Through the direct lending or direct operations, we're providing the debt or equity directly into the SMEs that are actually into businesses that have some measurable impacts in the economy. And then we also have the indirect investments that we channel through the financial institutions in the country. And I think for now, I'll leave it there.
Yeah, that's super. Actually, yeah, so you notice that even most recently, I'm sure Andrew would be aware, and Haga actually, we've been engaging around things like guarantees. So you'd find that predominantly as DBZ, we would, of course, provide capital into such structures. And we would expect that such structures maybe would address a theme like inclusive finance. So, and then we would also have other programs like ones we've had in the past, which would speak to rural finance. That's of course with our collaborating partners who are the RUFA. So and the IFAD. So I think it's one of those things that in our investment practice has gone without saying, that our attention to impact investing is predominantly there.
Okay, thank you so much. Let's move on. What are the complementary activities to impact investing as defined by your organization that your organization is offering your clients? Maybe we can go back to Mrs. Minofu from the IFC.
Hello, thank you very much. I think I had started on the conversation a little bit when I was answering the first question, because what I was saying is, I think one of the challenges that we have been seeing in the impact investing arena is that usually we do not find projects of the right size that can be able to attract private sector, the right kind of private sector capital, and also deliver the impacts that are required. So what we are doing as the IFC, as I had mentioned earlier, is working towards creating these projects ourselves as part of our IFC 3.0 strategy, which is creating markets and also making sure that in this regard, we are able to structure the projects in a way that they are able to respond effectively to some of these challenges that have been mentioned, that are the goals of impact investing. And another thing that I wanted to mention as well as IFC, because when you look at impact investing, because it cuts across, it's a really a broad spectrum and it cuts across so many issues. When we look at the issues of renewable energy, would like to mention here that one of the flagship investments that IFC has done in Zambia is on the Scaling Solar program. So those are some of the things that we do to make sure that we are able to create replicable models that others can also be able to use, and in a sense increase the impact that is made on the ground. In addition, under inclusive finance, which is also something that is very high up on the agenda for IFC, we've been working in Zambia on a number of programs. Notable amongst those is the Secured Transactions and Collateral Registry program, because we do realize that although most access to finance is an issue that is really affecting most of the firms in Zambia, and some of them, they find it difficult to access financing because of issues around collateral and also ability to create their own credit profile. So we have worked together with the Bank of Zambia and PACRA in developing what we call that movable collateral registry program, as well as credit reporting structures, so that the SMEs that are also able to deliver this kind of impact can be able to access finance easier. Thank you, Christian.
Okay, thank you so much. And let me also raise that question to you, Calvin and Samantha, but also keeping in mind the framework of the study in a sense that if you could make reference to the last couple of years since we are looking at activities that has happened in the Zambian impact investing market since the completion of the baseline study in 2019. So basically 2019 and 2020 is the focus of this study. So let me just repeat again. So what is the kind of complementary activities to impact investing that the Development Bank of Zambia is offering to its clients?
Okay, thanks, Christian. And yes, most recently, actually, what the bank has embarked onto is what we are defining as our new strategic direction, our new strategic objectives for the period to 2024, now 2020 to 2024. So you notice that in our strategic plan, we have certain activities that we can deem are complementary to impact investments, to the impact investments we do. One of which is what we call the investment advisory services. So under this wing, what we get involved in is, of course, through our strategic partners. You find persons like the Prospero team, the NAB team, would proactively engage and just try and see how we can provide certain investment advisory services that would prove helpful. At Prospero, we've been engaging on the ICA. That's something that's worth noting. And also through the NAB, we've been engaging around the credit guarantee scheme that, of course, seeks to support and address issues around inclusive finance. So I think that's one of the many other items that we've that I could say is most recent. as your question had posed.
Okay.
Yeah.
You want to add anything to that, Samantha, or shall I continue?
Well, probably just to make an addition, and in line with what the submission from IFC, it is true that there is a lot of difficulty in accessing finance. And so you find that, of course, different institutions have different eligibility criteria. And so as a bank, we have taken up the initiative to actually develop these pipelines and also pass them to our cooperating partners, identify what sort of financing they can actually access and refer them to the participating financial institutions. And this is why we have taken a deliberate approach of actually even going through the participating financial institutions just to ensure that the wider coverage is actually made.
Okay. Okay. Mrs. Minofo, in your last remarks, you made reference to the very famous IFC solar or renewable energy projects. But looking at the last couple of years since 2019 and 2020, first of all, how many investment or transaction has IFC actually carried out in Zambia? And on that basis, how do you scout for potential investment targets in Zambia overall?
Thank you very much. Apart from the investment in scaling solar that I singled out, IFC has made numerous investments in Zambia over the last, I would say, 3 years. I would say between 2019 and 2021. The more recent ones are investments that we have made in the tourism sector. We recently supported the establishment of the Bonanza Hotel development. And in supporting that particular development, we were looking at it more from the impact investing angle as well. Because one of the key elements that we had in that investment was to see how that investment could link up with other programs that the World Bank Group is doing. For example, the agricultural commercialization program. So in that particular investment, we are also looking at linking up SMEs through the value chains, both for supply of food products and through agricultural products into the hotel. And the other investments that we have made have been around the real estate, where we've invested in a number of shopping centers. Investing in shopping centers for us is a way of also creating an outlet for some of the value chains that we are also supporting in Zambia. But in addition to that, we've also made investments in terms of increasing the digital footprint. So as a result of COVID, we have increasingly seen that more and more companies are now turning digital, and there's more demand for digital services, which means that we have to invest more in digital infrastructure. So those are some of the investments that we have just made in the recent period. And obviously, when we are looking at investments, critical for IFC is first of all the impact itself that the investment will make. So we look at it from a double angle, as it were, making sure that the investment is financially sustainable, of course, but uppermost, we like to make sure that the investment is delivering specific impacts into the Zambian economy. Thank you.
Okay, thank you very much. And let me revert back to Development Bank of Zambia again, looking at the last 2 years since 2019. What are the type of impact investings that the Development Bank of Zambia has carried out? And how did you actually scout for these potential investment targets that eventually led to the transaction?
Okay, thanks, Christian. So I guess to answer your question head out, you said what are the kind of investments? I think I'll start from how, of course, we scout out our investments. Of course, we do have a proactive approach where we would proactively engage in certain deal sourcing activities. Others would be most recently, I think that was the SIIA 2019. We were present there, and we got a chance to, of course, get engaged with about, I think I would say 26 impact enterprises, if I remember the number correctly. So already that's an idea of how we would go through our deal sourcing. Of course, we would be proactive about it. Also, we do have walk-in clients who would come to the bank and submit an application. And once we have something coming through the system, we do have, of course, our appraisal system that would pay attention to certain impact objectives and also certain, of course, when I say impact objectives, I mean the issues around financial return and also a positive impact or externality. And then, so once they go through that system, you'd find that successful projects that have, of course, made it to the public eye would be projects like the Yalelo project. I think that one is commonly known to the public at this point, and it's sitting also on our website. That's one, of course, where they successfully raised equity from us, and we were glad to support them and walk them through, get them to where they need to be, where they would attract other impact investors, if I'm correct, the Fin Fund, right? Yeah, like the Fin Fund. And aside from that, you'd find, against the theme of affordable housing, you'd find that we've been also supportive to other players like in the market, like the ZMBS. We understand what kind of value proposition they drive to the market, and we gauged that to be along the lines of affordable housing. So I'm not sure if that does suffice with regards to question, but okay.
That's perfect. Thank you so much, Calvin. And then the last question in the first round, on the first part of today's webinar, going back to the IFC. So once you have identified those so-called investment targets, how do you actually work with either the project owner, if it's an infrastructure project, or the CEO of the company, if it's a company, in terms of defining the social and financial objectives? What is the methodology, and what is the process that IFC pursue in order to fulfill the objectives of the new IFC 3.0? Very fascinating new approach that you have by integrating the IFC activities with the rest of the World Bank Group, which I think is just spot on the right way to go forward. So back to you, Mrs. Minofo. If you could kindly share with us how you do that.
As I mentioned earlier, obviously measurement of the objectives is critical for us to be able to achieve the impact that we want in the investments that we have. So what we do when we are working on these transactions upfront, we agree with the project promoters or project developers on the specific objectives that we hope the project will achieve. And these objectives have to be measurable and tie in with the sorts of impacts that IFC would like to see. And based on that, we then are able to incorporate these measurable objectives even in the term sheets itself. So that's one thing that is unique about the IFC, because apart from just measuring the financial performance of the project, we also proactively measure the impacts the project is delivering. So we are able to then, at the end of any specific period, able to see if the project is able to meet the objectives that we had agreed upon. Thank you.
Okay, thanks a lot. And Samantha and Calvin, if you would kindly share with us how you proceed in your interaction with, for example, the 26 projects or project companies that you've been dealing with the past couple of years to make sure that your development objective is achieved.
Okay, thank you, Christian. And our approach is not any different from IFC. So as Development Bank of Zambia, we of course do have different sources of financing, and which all have different conditions, of course. So what we do is ensure that we actually appraise these projects in line with the, first of all, our eligibility criteria and also the parameters set out in our investment policy. And to ensure that whatever we have approved is carried on, we ensure that we embed these terms and covenants into the facilitators, which are then agreed upon, executed by both parties. And then we get on with the monitoring of that. So I should also take this opportunity at this point to say we have, at this instance, applied for SIIA accreditation to the GCF, and we are hopeful that will be accredited probably in the next board meeting. So with that, we'll be able to embed all those terms or conditions that we would actually want to measure the impact on, and outline them into those facilitators and term sheets before, as well as like IFC does during the development of those projects. So that is how we actually ensure that we are able to follow the objectives and how they're achieved when we make those investments.
Okay. Thank you so much. Because of the time, we will open up the discussions only after the second part. So let me continue to the second part of today's discussion. So basically, there's a lot of considerable enthusiasm around impact investing, both in developing countries as well as developed countries. But little data is available to business and policymakers, particularly in developing economies, to guide them as they seek to strengthen impact investment ecosystem, attract impact finance, and build impact economies. Attracting impact investment to new market frequently depends on raising awareness of opportunities, changing investor perceptions, and building commitment to impact investment. But how do we measure and report on variables such as awareness, perception, and commitment? This was the key motivational questions that the Global Steering Group National Advisory Board's Impact Investment Climate Survey, which aims to collect information from fund and asset managers on the awareness and the perception of Zambia as an impact investment location. The discussion of the second part of today's webinar seeks to highlight some key questions, again drawn from the terms of reference of the study that we are undertaking. So let me start by raising the first question. So, according to the role, an important role that the IFC has played in Zambia for decades, but more focusing on, again, on the last couple of years and looking forward, what are the key barriers that currently inhibit the expansion of the impact finance industry in Zambia from the IFC perspective and from the IFC experience? Mrs. If you would start.
Hope you can still hear me, because somehow you were breaking when you're speaking. So I hope it's not my network. As I mentioned earlier, the biggest challenge for us is that normally we don't find the projects and companies at the right kind of scale that would enable a sustainable and resilient climate smart investments. So that's the scale of projects that are available. Attached to scale is also the issue of project developers and project promoters. It is actually sometimes very difficult to really get committed project developers and promoters that are really keen to to embrace the whole issue of impact investing in their projects. So those are one of the biggest challenges that we face. The other challenge that we face as IFC is obviously we are not immune to economic issues and macro issues happening on the ground. So those also impact on the strength of the promoters that we are able to engage with. So I think for us is what we have been trying to do is to develop more co-investing platforms so that we can be able to aggregate some of the impact investments into larger ticket sizes, and then so that we can have a greater impact on the emerging markets. And also, I know I'm overusing this, but also really harnessing the IFC 3.0 strategy to see how we can ramp up some of our upstream work to increase the pipeline of bankable projects. Thank you.
Thank you so much. And again, from National Development Finance Institution's perspective, like Development Bank of Zambia, what do you see as being the major barriers that are inhibiting the expansion of Zambia's impact investing markets? Samantha and Calvin, over to you.
Okay, one of the, I think the first barrier that I can speak of is probably, maybe I can just, in a nutshell, just call it a lack of an enabling environment. And when I talk about that, I'm talking about an environment that is actually open and suitable to attract investors. So I will give an example. We have a fund that we're working on, a credit line under the renewable energy sector. So you find that the renewable energy has a lot of potential investors that have approached us, and some of the complaints are that there isn't a regulatory framework that actually distinguishes, say, maybe the smaller packages of these renewable type of projects. Say, for instance, one who has to obtain licenses for a solar home system and one who has to obtain a license for microgrid. They have to go through the same process, and so they feel it's a little bit onerous, and they have to be a lot of costs that are incurred in that. So it actually impacts on which investors would actually invest, because they have to weigh up the cost benefits analysis before they can actually come into the country to come and invest. So that is one area in which I think that actually acts as a barrier in the country.
Yeah, I think to add to Samantha as well, when you talk about the enabling environment to start with, and let's just, I'll look at it also from like a financial regulatory perspective, you'd find that mainstream investment regulations and what we are calling here impact investment regulations, there isn't much difference between the two, especially within the country. So you'd find that policy isn't really helping create, of course, more opportunity for impact capital to be unlocked, if that's yeah, to create more opportunity for impact capital to be unlocked. So I would say that at the moment, we are yet to see places around policy to try and at least be a bit proactive around that perspective. And then aside from the environment itself, I would also talk, we would also maybe agree, I think we agree as well with the IFC on how you'd find trying to get, of course, the right kind of scale and the right kind of impact projects on board is also a bit of a challenge, especially with regards to a pipeline development of impact projects, because the capital that, say, would unlock, as Samantha had put it, the GCF is something that we are yet to attain. The accreditation is coming, and then you'd find that that kind of capital requires a specific kind of impact. It could be like a green impact themed kind of project. So for us to get to that project, there's going to be a fair amount of project development that will be put into place to at least make sure that you have the right kind of project and the right kind of scale in place for the GCF to deploy capital in that direction. So I guess in a nutshell, you'd find things like an enabling environment, things like the right kind of scale in terms of the projects. Those are a bit of some of the barriers in terms of our experiences.
And also, just to add on, Christian, I think the appetite to actually receive this or participate in the impact financing space is really high. However, you find that for institutions to actually tap into that capital also is very, very onerous. You know, the requirements that are supposed to be fulfilled or met are pretty much at a high level. So we're looking at the systems, the expected systems, expected policies in place. So it takes a while before a certain institution can be, for instance, be accredited. And I'll give particular an example, say the GCF, the JF, all those institutions that you would actually want to tap resources from. So you find that the requirements are actually kind of at high level. And so it takes time before institutions can actually build them so that we can actually expand this impact finance industry in the country.
Yeah, I agree with Samantha. And another addition to this as well as the thing that we term as perceived risk of our country as well to the outside world. So you'd find that as a DFI, we are, as the national DFI, we are the ideal institution with which we can unlock this impact capital from outside to channel it within, especially for looking at big impact capital like the GCF itself. So you find as you are trying to unlock these pockets of capitals that sit in the international market, these same international players have a certain perceived risk of the country. So that tends to have, depending on how, of course, if you, from a practical perspective, you'd be walking into a meeting with these prospective impact custodians of impact capital in the international market. And then one of the things that meets you on the news is maybe a credit rating news. So you can imagine already the kind of perception with which that meeting would run with. So perceived risk is also something that I think we probably need to work on. I think it's been quite positive of late. We've had some latest upgrades in our ratings. So I think we expect at least issues around perceived risk to be relatively handled. Thank you.
Okay, thank you so much for this very elaborate and detailed answer. That's very helpful. So now I'm coming to the very last question before we open up to the floor, and maybe the most important question. So based on the challenges that the impact investors are confronted with, both the non-DFIs as well as the DFIs, what are the key drivers that could influence the growth of the impact investing market in Zambia? Again, from your organizational perspective and the experience that you have in Zambia. So again, let me allow Mrs. Minufu to come up with her policy recommendations, particularly giving the new strategy, very interesting strategy that's coming out of the World Bank Group for IFC and the rest of the group.
Thank you very much, Christian. I think one issue that we have been doing quite well in terms of really scaling up impact investing is where we are able to support the floating of green or social bonds. We haven't done that yet in Zambia, but I believe this could also be an opportunity of really increasing the footprint for impact investing, because if we are able to do like your green and social bonds, we are then able to harness capital from numerous resources that can then be used, even in this sense, when we're talking about the scale of projects. Maybe we can look at a green bond and a social bond that is really focused on maybe providing financing to SMEs involved in certain really strong impact projects. So I think that's the only thing that I can provide at this stage. Thank you.
But that was also very, very helpful. So thank you so much for those recommendations. Samantha and Calvin, you have the last word before. What are your recommendations? What would you recommend the National Advisory Board for Impact Investing in Zambia where should they sit in terms of what are the binding constraints that they should focus on as someone trying to make Zambia more enabling and attractive destination for impact investing from your perspective?
Thanks, Christian. Okay, the last part of the question asked if like to the National Advisory Board. I think, okay, first of all, your question asked about the drivers that could influence the growth of impact finance in Zambia. To start with, I think what the impact industry in the country has achieved so far with the National Advisory Board has been a big step in that direction. And of course, with players like the NAB, you'd expect that we would start seeing some changes around policy and issues around policy that governs the capital that sits in the country. An example would be the capital that sits, say, with the pension funds themselves. Many people would call that capital that has been sidelined with regards to impact investments. So ways in which we can unlock that capital, of course, through the National Advisory Board's interventions, that could be key as well. We could, of course, try and advocate for policy that seeks to have, say, even certain pension capital, certain pension or pension houses themselves subscribing to a certain impact investing approach in how they deploy their capital. That we could see at least some change around that. I guess other influences, I think in a nutshell, I think in a nutshell that's what I would submit. Samantha?
All right, anyway, my expectation, I think, with the association would be for them to just act as a go between the needs of the investors and also the needs of, say, the various businesses in the various sectors and what gaps are there that could actually help attract more financing into the country. Thank you.
Okay, fantastic. Before I open up the floor to those attendees that are with us today, I will give Mr. Andrew Kalimani the opportunity to raise any questions that you think that should have been covered as well today with these DFIs that we have attending the event. So Andrew, if you have a few questions that you would like to raise.
Thanks so much, Christian. Yeah, I think I do have one targeted towards IFC. I love the insights that you provide on the table in terms of what you're doing around dealing with the ticket sizes and the sort of projects on the ground that could be smaller than what the suppliers of capital bring on the table. But from the experience, I'd like to learn a few things. What is the main determinant to small ticket sizes from the SME side? Is it because they lack capacity to actually have bigger projects? Or is it that they just think if they ask for more money from an investor, it will be difficult to get the money? What seems to be the bigger driver towards small ticket sizes in terms of the project size? And then the mismatch from the supplier who's bringing in a huge portfolio of funds, and you find there's that gap in the middle. What could be the real cause of that, if from your experience?
Thank you very much, Andrew, for that question. I think a number of issues, and I think we must first look at the sort of financing that IFC usually provides, and most large development finance institutions, which is more your project finance type of financing, which by its very nature, you would want to look at a certain minimum size of project because of the paperwork that is involved in terms of putting together a project finance project. So by its very nature, it doesn't make sense if you're looking at a smaller ticket size. But now to address the issue of the smaller ticket size, I think that issue is actually more a structural issue, because what it means is the small enterprises are not growing to a stage where they can be able to absorb higher levels of capital. Obviously, as IFC or any financial institutions, we wouldn't want to just say for the sake of it, would like to give this project $5 million when they haven't yet demonstrated the capacity, they don't have the right kind of track record. So that's the issue. So the issue is, first of all, we must be able to have a fund that is targeted towards the SMEs. But when targeting funding towards the SMEs, it must be purposeful so that we are also working on the SMEs so that they can start scaling up and then be able to absorb more capital as they grow. So I think that is the issue. We have a whole lot of SMEs that are, some of them, because informality is also high in Zambia, most of them have not even graduated into the formal sector. So we have that whole host of SMEs that need to graduate to the formal sector, start also scaling up their operations based on their track record, and then be able to absorb more capital. Thank you.
Thanks so much. I think you bring in exciting discussion points. We as an app, we're actually arranging a demand side webinar end of this month. And I think it'd be nice to continue these conversations off this platform. Just see how we can actually coordinate and cooperate in terms of building the capacity for the SMEs on the smaller side, so they can actually be able to get more financing from the whatever is coming through the country. So I think we can chat offline.
Absolutely, and happy to do that. Thank you.
Thanks, Christian. I think that's it.
Okay, then I'm happy to open up the floor for 5 minutes. We are a little bit over time, but for those of you who are still with us today, this is an opportunity to directly reach out to the IFC or the Development Bank of Zambia. So are there any questions among the participants? They have been very clear in their answers today, so so.
Hagar, you had a question. Now, has that gone off your head?
Maybe Hagai from the climate survey. Maybe a question from the climate survey you want to raise.
Hagai, you are muted. If you are speaking, you are muted.
Well,
so Chris, maybe another point for me, as people are thinking through I think the last point that DBZ brought through, basically actually from your last question, it might also be a good idea to begin to engage more around some of these barriers to the flow of impact capital into the country, and then try and see how we can work together in terms of dealing with those barriers on a one-to-one, and hopefully try and resolve and create an open pathway for more capital to come through. So I think another conversation between the DBZ and IFC and ourselves might also be good to look at those barriers and see how we can actually attend to them.
Yeah, if I could also just quickly jump in on that one, Andrew, I totally agree. And you see, it's something that helps influence policy and influence the nation's capital, nation capital in itself is these things like as simple as what we've noticed in the media, like where the Ministry of Finance calls for budget for budget submissions. So you'd find something like that is a platform upon which we could, of course, provide some form of information that helps the ministry themselves try and direct policies. So you'd find after this webinar, we could sit down as NAB, DBZ, and any other interested partners, and we could put together, of course, a consolidated and convincing argument to the Ministry of Finance in this same budget submission period, because the deadline is the 15th of May. And we could forward to them a paper that seeks to, of course, inform them how best we can unlock capital that's sitting with the pension funds.
Exactly. Yeah, I think let's do that.
Super.
Peter, can you see if there's any questions? I can see there in a chat box, if there's anyone who prefer to ask a question in writing.
Well, I can't see any questions now.
There's no questions.
I asked a question actually, Christian.
Okay, Duncan, please go ahead.
Sure. I was very interested to hear from IFC and Development Bank of Zambia that we work with investors in a number of African countries, and we find currency and liquidity risk are serious issues for most of them. I just wondered if you were addressing those issues at all, and if so, in what way you were addressing them.
I can go first from IFC.
Perfect.
All right. I think that's a very pertinent question, and gives me an opportunity to mention of some of the tools that we now have available in Zambia, because previously Zambia was not eligible for what we call the SIIA private sector window. But now that eligibility has been extended to Zambia. And when I talk of the SIIA private sector window, is the private sector window financing that is available through the World Bank itself. Under that SIIA private sector window, there are a number of funding that is available, one of which is a local currency facility. Under that local currency facility, we are then able as IFC to lend in local currency whilst hedging against the risk of currency depreciation. So I think that's one of the tools that we now have available that we can be able to use in Zambia. But apart from that as well, we also have through some tools through our treasury division, where we are also able to make available hard currency financing to Zambian financial institutions mainly, so that they can be able to provide dollar financing, especially during this period where there is an FX liquidity shortage. Thank you.
Thank you very much.
And just to provide feedback from the DBZ side, we currently are employing what we call natural hedging. So we do not provide, say, foreign currency to a project that is actually having its cash flows, say, in the local currency. So we always just match the currency of the facility to the currency of the cash flows. And that is what we have been doing. However, we have been in discussions with REAP, and like IFC is providing the local currency facility, we'll be able to actually, that's one of the instruments that one of the cooperating partners, the REAP, is actually developing. So we are in discussions with them, and we'll be able to actually work with them on that. Thank you.
Thank you, very interesting.
Christian, I just noted the comment that Duncan made in the chat. I've picked that comment. Obviously, can benefit from your experience. We'll engage after the meeting. I got your email, so we'll engage.
Perfect. Yeah, thank you.
Okay, I know that from my personal experience in Lusaka, there's a lot of traffic. So we are in downtown Lusaka. So I think if there's no further questions, I think we'll move on to wrapping up. So Peter, over to you.
All right, okay. Well, good evening, everyone. My name is Peter Chintu, and I am the Business Development Associate at 5P Group. I would like to thank the Development Bank of Zambia, as well as the IFC, including the National Advisory Board for Impact Investing, for the support that they have rendered in taking part of this roundtable, which was focusing on the supply of impact capital to Zambia. And thank you very much to each and everyone who actually dialed in and stayed to this very end. At this point in time, I would just like to mention that most of the investors that are present, the impact investors that are present with us, at this point in time are actually aware of the investment climate survey that was being rolled out by the National Advisory Board for Impact Investing. So to feed into the study that we're actually doing, we are adding some questions to that survey. Yes, so we shall start populating the updated survey, I think later tonight. And then for those investors that took their time to fill in and complete the first survey, I think what you should focus on is just tackling the new questions that we're going to add to the survey. So I can safely say this roundtable webinar has been as informative as possible. And from 4IP's perspective, it has been a success. Thank you so very much. I would also love to announce that next week, Thursday, which is the 13th of May, 2021, from 11:30 to somewhere 12:30 Central African time, we're going to host another roundtable webinar, but this one is going to focus on non-DFI impact investors. Of course, looking at the support to enterprise growth in Zambia. So the proposed attendees could be Kukula Capital, 3030 Capital, as well as Zenga Ventures, including 3 international impact investors that we are later to announce. So thank you so very much. And just in case you joined in towards the end of this roundtable webinar, you have the recording available on our 4IP group channel. And just in case you want to find out more about our activities, as well as the study that we are carrying out on behalf of the National Advisory Board for Impact Investing in Zambia, you can reach out to Christian or I by firstly visiting our homepage, which is www.4ipgroup.org, or you can visit our LinkedIn page, or you can reach out directly to him. I'm sure the emails are showing here, as well as me. Thank you very much. And from Lusaka, Zambia, have a pleasant evening.
Thank you and good evening.
Thanks, Peter.
Bye.
All right, okay.
Have a good evening.
All right, bye-bye.
Bye.
Thank you, Peter. Thank you, Christian.
Thank you, Kelvin.
Thank you. Thank you, Mr.
All right,
Kazimman.
thank you.
Yeah.
Hi, Christian. I think your mic is, I think you're on mute. Oh, I can't hear you.
Just stopping the record.